Yeah, hello guys, welcome back. This is Pip Shooter speaking. All right, so now I'm gonna be actually teaching you guys not really a new strategy, but at least it is something more advanced than what you know before. All right, so this is all about divergence. From the description of what you saw, it's gonna be a strategy explaining or telling you how you can trade using divergence in a more different way. Okay, so right now let's move on to adding my RSI, the relative strength index. The period is 14, apply to close. Okay, so now let me show you how you can use the RSI to spot divergence and for you to know when the market is about to break out from a particular trend. Okay, now let's make use of, for example, boom 500 in particular. Okay, so now this is boom 500 right now. So now let me show you an example of what I mean. For instance, now the market over here kept on making higher highs, as you can see here. Market kept on making higher highs. On the RSI, it kept on making lower highs. Okay, so this alone is now divergence from what we know. So from here, what I will do is I'll take my tools and then make it a channel. Okay, I'll make it a channel. Then I will now have to wait for the market to break out of this channel, because normally divergence state that, or divergence based on what we know as divergence. Divergence actually tells you that the market is about to change direction or the market is getting weak. Okay, so therefore, we can see this lower highs from this point down to this certain point. The market keep on creating lower highs and lower highs and lower highs. So whereas on the chart, we have the market to create higher highs and higher highs and higher highs. So therefore, what you have to do is just to wait for the market to break out of this uh, bullish trend, and then you trade the breakout. You can see what happened over here. The market did break out at this point. Okay, then we'll make this, wait for a retest, and then you enter the market. Normally, see what happened over here. The market didn't actually retest this place immediately after the breakout. It had to go back a little bit, and then the retest happened at this point, which we can spot using our Fibonacci tool. From there, you make your entry, confirm, or whereas you can even trade the breakout immediately the market breaks out from the channel, and then your stop loss inside the channel, and then take profit. You determine your take profit by yourself. So as you can see, after that, market still went all the way. After retesting the trend line, the market went all the way down. Okay. So one thing I want to let you guys know is that I trade, or my strategy is just based on price action only. Okay, because that has been, or that is the only strategy that works fine. That is the only strategy that I've proven to not fail at any given time. Okay, so now here's another example of divergence. All right, okay, so this is episode 2 of this divergence trading. Divergence is a very, very powerful strategy. So as you can see now, the market is in a bullish run at this point. Okay. So now see what happened at this point. The market has been respecting this higher highs from the air, higher high, higher low, sorry, higher low. As you can see, the higher low and then another higher low. So the market kept on making this higher low until this point. And to this point, the market changed direction. It started making lower highs and lower highs on the RSI, whereas the market is still in a bullish run, making higher lows and higher lows. So this is divergence at this point. We now spot our divergence. So it's now an added advantage for us to start looking for breakouts. I will make it a channel. I'll wait for the market to break out of the channel. Give me a retest. You can see this is the support level, this support level, this support level. Automatically, here becomes a support level. Okay. So after the market still went down, retested as usual, as normal, in which you can actually spot using a Fibonacci tool. The what's it called? The retracement level. Okay, so this one now happened on the 61.8 zone. Okay, so we make our entry, stop loss inside. You can even make your stop loss so tight. It depends on what you're about to risk or what you can risk in the market. You take profit. That is left for you to decide your take profit level. Alright. So like let's keep moving on. I'll keep on showing you guys more examples. More examples. Okay, then for the buying part of it, here is the divergence. Okay. Here the market is making lower highs. Then the RSI turned to start making higher highs. As you can see here. So this is divergence. In this case, you wait for a breakout. Automatically, we know this thing is in a downtrend. Okay, this market has been in a downtrend. See now. Okay, so the market did break out from here and then bought, retested this trend line, and then the market went on a bullish run, as you can see. All right, so you just have to be patient with the market and then spot out these divergences and then trade them. All right, here's another example of divergence and breakout. Okay, out here the market keep on making higher highs and higher highs alongside with the market higher highs and higher highs. So you can see this is a short-term bullish trend. All right, so from here, as we see on the RSI, the market started diverging. All right, whereas on the chart, this is what we have. From this point, we have higher highs and higher highs. Okay, so therefore, what I normally like to do is I will make it a channel. Okay, I'll wait for the breakout. I'll wait for the market to break out from this channel, and then I will trade the breakout. This is a signal. Sorry, this is a strategy. I'm actually showing you guys or telling you guys how you can trade using divergence. Right? Okay. This is my way, or this is one of the strategies I use to trade. Okay. Profits made, stop loss. Can make it as thin or as lean as possible. It depends on what you are ready to risk in the market. Okay. So now let's keep going, and I'm going to show you guys more examples of this divergence and how to trade them. Okay. All right. So now let's go to another pair. Let's check something like let's check something like crash, or let me say boom 1000. Okay. Now checking boom 1000, and then we're going to see what's up with boom 1000. All right. Okay. The boom 1000. The time frame for this is M15. All right. Stick to the M15 and you're going to spot those things I'm saying. All right. Here is an example. The market has been making higher highs and higher highs and higher highs and higher highs in a bullish run. And then here, at this point, we started spotting lower highs and lower highs. As you can see, this is an example of divergence. Make the chart, make the chart a channel and trade the breakout. Simple as that. Always be careful. Your stop loss level matters. Okay, stop loss level matters. Alright, so let's keep going and then we'll soon find another setup. Okay, so study is divergence. The market started diverging at some point. It started creating lower highs and lower highs, whereas on the chart it was going higher highs and higher highs. After that, the market did sell. Okay, like from here, so from here to here was higher highs, and then on the RSI, you can see what we have, a low to a lower high. This is divergence. Make the chart at this point a channel, trade the breakout. So you can see, guys, we're spotting our trades, guys. We're spotting our trades. Spotting our trades. Stop loss as tight as possible. Okay. So now, let me check another pair, or let me just scroll back. Let's see if we can get more trades, more trade signals. Okay. Alright, this one is a buying trend. As you can see what happened here, guys. Okay, there was no breakout at this point. There's no breakout. Okay, guys. So let's check another pair. Let's look at something like okay. Let's check a volatility pair. Let's check step index. M15. So right now, guys, I'm on step index on the M15. So we start looking for divergence. Once we spot divergence, we look to trade them. Right now, guys, I've seen an example of divergence here. The market has been creating a high, subsequent lower highs and lower highs and lower highs. All right. So go on the RSI, see what we have from this point as well. We've been making higher highs. All right. So this is divergence at this point. You make the chart a channel, trade the breakout. As you can see, this is a double bottom at this point. Nice signal. Here we have a breakout, a retest at this point. Okay. Then we buy. Alright. We buy the market from here. This is just a free strategy I'm really giving out. So it's just giving out because, like I always say, my strategy is based off of price action only. Okay, because this is the only strategy, or this is the only way of trading. Because mind you, what's it called? Price action is not really a strategy. It's just a way or a style of trading. Okay, what determines or what makes you trader is the way you enter the market and execute your trades. Everybody might know how to analyze, but the main thing there is how to know when to enter and when to exit your trade. Okay, so guys, at this point right here, we started spotting divergence. Just gonna see. Okay, now we'll make it a channel. Market has been in an uptrend, as you can see from here. We'll make it a channel, and then we trade the breakout, guys. All right, this is how I do it. Your stop loss as tight as possible. Okay, then you sell. All right. Okay, so guys, let's keep going and then see if you can get more examples of divergence trading. Okay, guys, let's check volatility index. Let's check something like volatility um 101S. Okay, volatility 101X. VIX 101S. Okay, so let's go. All right, guys. So VIX 101S, we keep looking out for the divergence. All right. So we spotted one right here. The market creating higher highs. RSI now came up with lower highs. As you can see, we make the chart a channel and then we trade the breakout. Here is a breakout. Here's a support level. Okay. Support level got broken. We trade the retest. Make your profit and leave the market. Okay. So here, make an entry and then profit. Okay. This is still selling all the way down on volatility 101S. I took a trade on this. I took a sell already. I entered somewhere here. Okay. And I called out this trade yesterday on my VIP. So let's check volatility 10 index. All right. Okay. So we keep on looking for divergence. We're looking to trade them. It's just a free strategy. Try and work on yourself towards um, price action. It's best form of trading. Trust me. This is the best form of trading I've seen. All right. VIX 10 doesn't make that much movement. Its movement is always as slow. Let's check something else. Let's check volatility 25. All right. VIX 25. We'll look out for divergence. Okay. Divergence, divergence. That's what we are looking to trade. Okay. All right. Here's the divergence at this point. This is a high to a higher high point, and then the other side made a low to a lower high. We make the chart a channel and we trade the breakout. Okay. sell breakout and test point, stop loss inside, and take profits smashed. Okay, guys, so if you're not on our Telegram channels, please go down to the description box below, click the link, and join our Telegram group, the Telegram channel, and then give a like to this video, and then subscribe. Turn on your notification bell for next update, guys. Okay. So right now, I think I'm going to be closing for today on this video. All right, the next one I'm going to be dropping is a very, very, very awesome strategy. You're all going to like it. I'm going to like it. All right, so leave your comment on this the comment section below what you think about this video, or what you think you really want to get clear about it. All right, you can talk on making another one for you guys. All right, so this is actually Pip Shooter signing out.